And if you're uncertain and you really aren't sure where you're at with those exercises, then you can definitely check out the solutions to help you along and perhaps work backwards to see what the solution is and how you can get there with your working. So next, we're going to have a look at a bit of an assessment overview. So this unit is all leading up to IA3, which, as I mentioned earlier, is a project on cash management. And so it requires you to develop a solution to achieve an accounting goal for a trading GST business. So there are a bunch of different goals that you may be doing this on. And this is an internal assignment, so your teacher would have written this assignment and would have chosen your business goal. So it could be expanding the business, it could be moving to a new premises, it could be implementing a new project like outsourcing, for example, or it could be purchasing a major non-current asset. So an asset that you're going to have for more than 1 year. For this assignment, you have 4 weeks, and that includes 7 hours of class time to complete the task. So in response to that desired goal that you're given in the business scenario, you are going to have a couple of elements. You've got your practical responses, which is the financial documents that you're going to create using those computerized accounting processes that we spoke about earlier, whether it be MyOb or QuickBooks or some other equivalent. And then you're also going to have your cash budgets, including the input area, where you've got all that base information in the first tab of your spreadsheet, your statements of estimated receipts from accounts receivable, and your statements of GST payable and receivable. You'll be able to generate all of those using that spreadsheet software. Make sure that you use your formulas. They're going to help you make sure that things are as accurate as possible. And it's also something that your teacher can look at too to try and understand what you've done and how you've gotten the results that you've gotten, which can be handy as well. The second element is an extended response. So that is the form of the business report to the business manager or owner. It's 800 to 1,000 words, and it's going to involve all of those things we mentioned earlier. The analysis of the financial data, the interpretation, the evaluation of proposed alternative solutions, and the decision on what the solution should be and what your recommendations are. And all of this is in relation to that goal that you've been given in the business scenario. So the business report is providing information to the manager, and you want to divide it up into sections using headings. So being aware that the business manager may not understand all of the accounting practices, and so you need to make it understandable for them. But you also are making it formal. You're acting here as an accountant, as a professional, so you're speaking in language that reflects that professional nature of the report. So let's have a look at a QCEE IA3 sample response to see how to achieve these different syllabus requirements. So I encourage you to go to the QCEE website to have a look at all of the different resources they have there. They have got sample responses like this one. This one is a high-level sample response. They also have the different marking guides. They have the syllabus itself. They have different subject reports for each year. Often those things are accessed more so by teachers, but they do often explain how students are being marked, what sort of thing that you can expect for the assignments and exams you're going to be getting. So it can give you a bit of an edge over others if you are familiar with all of those things that the QCEA lay out that's publicly available there. And equally, do access those things for all of your subjects. It's all available on the website. So in this case, we've got a particular business. We've been given the context and the task. So Jared Jones is our business manager, our owner. He opened the business called Gym Supplies 3 months ago on the 1st of July 2019 as a sole trader trading GST business. So we've got the accountant, Frank, in this case, was appointed to set up the business file and record transactions in MyOb. So you would be acting as Frank in this case. And also he is to prepare cash budgets to guide future direction of the business. But after 2 months, Frank resigned. So he had only entered the transactions in MyOb for the first 2 months of trading, even though it's been trading 3 months. So, acting as the business manager, Jared has employed the services of an accounting firm to complete the monthly management accounting for the business and provide advice on its operations. So, this is where you come in. So, Frank was the equivalent of you, but you are taking over from Frank now as that person who is giving the advice and doing those monthly processes for the accounting for the business. The task, so as the management accountant for the accounting firm, you need to enter the remaining transactions into MyOb and create cash budgets and related financial documents for the client's business. So use the financial documents to prepare work papers presenting the accounting data and information and to create an accounting business report. The report should provide Jared with advice about the viability of purchasing a delivery vehicle. This is that business goal that is central to the assignment. So it's been clearly stated here. And as I mentioned earlier, there are a whole different bunch of goals that you could be given in your assignment. In this case, it's the purchase of a non-current asset, a delivery vehicle. And then you're also looking at the impact of this purchase on the business's financial performance and position. So you've got that source there if you want to access this specific document where I got this information. So you can see here some of the requirements and how the assignment has met those requirements. So this is a high-level paper. It doesn't meet all of the top syllabus requirements. I think it's about 23 out of 25, but it is very close to being just right. So one of the most basic things that you should be able to get right if you have good attention to detail is think about just getting the features of the report genre consistently demonstrated. So you want to have things like your title page or your title section where you've got things like the business name, you've got your reference to what it is you're doing. So you've got a report to the owner with their name and what you're doing. It's about the viability of purchasing a delivery vehicle. And then you've also got ex-accountant. So you could be putting your name there, but in this case, it's been anonymized. And we can see here where all of those criteria come in, where you've got analyzing and evaluating and communicating they're all relevant in the report section. The synthesizing and the solving and the applying are what you're going to be assessed on when you look at other elements previously. So using those computerized accounting processes, generating cash budgets, and solving all of those issues with those practical tasks. So here you can see we've got this this introduction where we're clearly stating what it is the report is doing. And so we want the thorough and logical explanation of issues. So we've got why the business is wanting to do what it's doing. So in order to offset the continual increase in the ongoing monthly delivery expenses required for sales customer service. So some of this is about you actually analyzing, and some of it is really just you picking out what information you need to explain to give the context at the start of your report. Now, every report is going to be different. Your different scenarios will potentially mean that you lay out your report differently. Your task sheet may have certain requirements that this one doesn't. So keep that in mind. This isn't the be-all and end-all of the way that you should do it, but it is great to have a bit of an example of where you can go with this potentially. So this report will evaluate the organization's current cash management position and provide viable cash budgets to forecast projected implications. So that is where we're looking at our what-if cash budgets. So the accounting data and information was examined from October 2019 to June 2020. It's always really important to mention dates so it's clear what it is you are talking about. And then you mentioned that you're proposing recommendations. They're based on available information disclosed during this period and are subject to competing external market conditions. So you can see that we've really got our terminology in there. It's formal. It's not in first person. We're writing in third person to get that really formal style in there. After the introduction, we move on to the overview. So this is where we're actually examining the financial data. Before we were just explaining in that logical way the situation. Now we're examining financial data through the identification of significant and relevant relationships. So, for example, we've mentioned we've got a current net loss, and this loss was attributed to marginal markup on sales items as evidenced by the cost of sales of $19,400. So something to keep in mind with this is don't just say things increased, things decreased, or this happened. Explain, go into depth, give the figures, support what it is that you're saying. So it's better to mention by how much something increased or decreased than just to generically say that it did or didn't increase or decrease. And you also want to give your ideas of why things occurred. So this loss was attributed to marginal markup on sales items, and then you providing the evidence as well. You could have just pulled that out of thin air, but you didn't. You're proving that you didn't by mentioning that the evidence is in that cost of goods sold figure. The business is in a solid financial situation as a startup business. So you need to not just say things like that, but then back it up again. So here they've got with total assets and limited liability commitments and the figures for each of those. So making sure that you're also succinct as well. The 800 to 1,000 words can be really tricky to stay inside, but that is going to come into that succinctness category for the communication criteria. You've got some evaluating on this page. So perceptive judgments for proposed alternatives or changes relating to cash management. So earlier I provided that example paragraph where we had done our what if analysis and we had adjusted our accounts receivable collection rates. So that paragraph was exploring a proposed alternative or a change relating to the cash management. So the organization would need to seek external financing for the purchase of the asset. So financing the purchase of the delivery vehicle, we've got a really clear heading, and then we're talking directly about what that financing would involve. And then we think about the details of that. So if you are needing to seek external financing for the purchase of this asset, then a logical thing to think about is, does the business already have a bank loan? And in this case, it does, and it has a commitment of $2,100. It is of concern as to whether the business could acquire external long-term financing given its current short-term debt obligations and a reportable net loss for the organization. So you're looking at all of the current situation of the business, and you're judging what those things mean. So yes, it does already have a bank loan, which suggests, it is possible for it to get that external financing, but then you're giving the other side of the story as well. It may not be able to secure another long-term financing agreement with the bank because of its poor position in those other areas. Then it gives us the sort of what if kind of situation. If the external financing was approved, the business would attract a higher business loan interest rate. Therefore, the business would have to foresee a significant increase in sales as a result of the delivery service in order to justify meeting this additional significant debt commitment. It's thinking about all of the possibilities relating to financing this purchase of the delivery vehicle. It's all based around the goal, and you're looking at what the accounts are, how they are interrelated, and then you're analyzing those, evaluating those, and writing your report based on what you've found. So next we have our ongoing costs associated with a delivery vehicle. You can see we've got this logical progression of ideas. So we've thought about the financing of the delivery vehicle, and then you move on. So assuming that you've managed to finance the vehicle, it's then looking at the ongoing costs associated with that vehicle. So a logical progression of ideas. Purchasing a delivery vehicle requires ongoing maintenance and associated costs. So then you're looking at different figures. We've got the historical cost, and the fact that that needs to be disclosed in subsequent financial periods. We've got an allocation of sales salaries would have to be costed. A decision would have to be made as to whether 2 staff would deliver the inventories. Therefore, the budget has been adjusted from 120 hours to 152 hours to recognize this. And then it's giving the figure for how much of an increase this is in expenses per month. So this is looking at a bit of a what-if situation here. Instead of changing the accounts receivable collection rates, like my example paragraph earlier, this time we are changing our wages with the number of hours worth of time we need to pay employees for. A delivery vehicle expense account would be created to disclose ongoing fuel and maintenance costs. and these expenses have been forecasted as 15% of total sales. So a really clear explanation of everything that is being done. Another thing that you can do is you can have your figures within your report to provide the visuals. And this really helps with making sure what you have written is easy to understand. So expenses without the vehicle is in red, expenses with the vehicle is in blue. We've got a really clear comparison to show what the situation would be in each of those scenarios. And then looking at that over a longer period, not just for 1 month, but over many months there. So that factors into that idea of being succinct when you've being able to put your information in a really easy to digest format like that. Then we've got a cost-benefit analysis for the delivery vehicle. So we're looking at trends in the financial data and information. And we are explaining everything with figures as usual. Something that they've got in the commentary on the side is we've got awareness of no increase in advertising expense. So advertising expense should increase to reflect a possible reason for this distinct increase in sales as from October 2019. Acknowledges trend history to inform unrealistic increases in cash and credit sales. So I encourage you to really pull apart all of the comments that they've got down the sides of these different samples on the QCEA website. You can see what was done well and what was potentially missed or what could be improved on, and that can help you with making sure you learn from it in your response as well. Again, another chart that we've got there with our cash at bank trend analysis. If the delivery vehicle was purchased outright, and we've got the discussion of that, and then the clear visualization as well. So again, really clear communication here. But then acknowledging all points of view. So we've said that the cash at bank account would be recorded as a bank overdraft until January 2020. However, this option would not be supported as the interest on this overdraft facility would be significant and the business would be restricted from accessing physical cash funds quickly. So it's showing a really good understanding of the processes of what would happen if this scenario was real life. And then our conclusion and our recommendations. So you can see the recommendations are formatted as points. So the equivalent of dot points, but laid out with the 5.1, 5.2. So it looks very professional. Convincing recommendations for cash management pertinent to the accounting context. So to finish off, let's have a look at some tips that you can take into the rest of the year for accounting. So like I mentioned earlier, it is really important to use your cash-related terminology. So unless you're referring to information you've been given that isn't cash-related information, make sure that you use cash terminology. So for example, instead of using outlays or expenses, use cash outflows, for example. And I've done a little bit of a cash budgeting word bank here, so you can see what kind of words and phrases you should be using in this assignment. So as you can see, a lot of it has the word cash there. Cash receipts, cash balance, cash collections. So instead of saying that, so let's have a look. How would you change the following sentence so it uses cash-related terminology? Accounts receivable collection rates were modified in the first what-if cash budget due to insufficient reimbursement and excessive bad debts. So what is the problematic phrase there that's not a cash related phrase? I'll give you a moment to think, and we'll come back to that in a second. So use it and its when referring to a business, not they or their. So when we're talking about multiple businesses, we then say they or their, because it becomes plural. But if we're talking about a singular business, it's an it, not an they, because it's not a person, it's a thing. So that's why we've got that distinction. Like I mentioned earlier as well, be specific. Don't tell us a figure has significantly increased or decreased without specifying by how much. And also, if you can, thinking about why as well. Write in third person and avoid your emotional language. This is writing a business report to a manager or an owner. You're not wanting to be in English, generating an emotional response from an audience. So don't use words like horrific situation. You want to be more neutral than that. You're professional. You're talking to the business owner. So you don't want to dramify what you're talking about. You don't want to alarm the person. If it was real and it was really their business, then they really wouldn't appreciate being scared by what you give them in your report. It's honest, but it's in that language that is appropriate for the context. So in that practice question that we have there that we looked at, insufficient reimbursement is the problem here. So reimbursement specifically is the word that we want to change. So insufficient cash collections could be what we replace that with. And then some memorization strategies that I mentioned earlier. So with our balance day adjustments, we've got our different accounts, and I mentioned that I have a bit of a strategy for remembering what ones are assets and what ones are liabilities. So I remember that pairs are assets. So pairs stands for prepaid expenses and accrued revenues. If you know that pairs are assets, then you know that your other two accounts, so your unearned revenues and your accrued expenses, must be the opposite. So those are your liabilities. And then we have GST, a strategy to help you remember how to calculate that. If it is included, you divide by 11. If it's not included, you divide by 10 to find the GST component. So, for example, when you are working with bad debts and you are given a figure and you're told that it's inclusive of GST, you need to then find the GST component to take it out of that figure, because that you then need to put into your financial records. The bad debts figure should always exclude the GST. So because it is included, you're told that it's included at the start, you divide by 11, with II representing the 1, 1. And then it's the opposite. If it's 10, not included, you've got the O in not representing the 0 in 10. As I mentioned earlier, drawings are debited, and the DR in drawings helps you remember that because debit, the acronym for that is DR. Some general tips to finish off. Definitely recommend accessing the QCEA's resources. It is super important to be across all of the requirements for all of your courses, and it is completely laid out for you in very clear, detailed boxes and tables and everything in the syllabus. So I encourage you to have a look at that. Now, they are really long documents and that can scare you away, but just jump to the sections that are relevant. It's going to have assessment overview sections. it's going to have topic overview sections where it tells you everything that you need to know for each topic that you'll be doing at school. And it also has a glossary as well, and that can be really handy if you want to try and understand the terminology that they may be using and the criteria and stuff like that that you may not be familiar with. Using the syllabus as a study guide is really handy because, like I said, they mention everything that you need to know. They can't assess you on anything that isn't in the syllabus. So if you have the syllabus down pat, then that is going to really set you up for success. And then use accounting terminology and that appropriate tone of voice, like I mentioned earlier. Don't make it doomsday. Make it that neutral kind of tone, that professional tone, and use that accounting terminology. And in this case, the cash related terminology, because it's about cash management.